Everyone expected China to disrupt gold markets, but almost nobody anticipated its sudden aggressive move into silver. Recent Chinese actions triggered shockwaves across global silver markets, accelerating predictions toward a dramatic $63 surge. Investors and analysts are scrambling to understand why China abruptly shifted strategic focus onto this overlooked precious metal. Silver has always been crucial for industrial production, yet China's intensified interest suggests much deeper motivations today. China is among the world's largest silver importers, refiners, and industrial consumers, driving essential modern technologies globally. Silver's importance spans solar panels, electric vehicles, 5G components, satellite systems, and highly efficient electronic circuitry. China dominates every industry requiring silver, making its stockpiling efforts extraordinarily significant for global supply chains. When China begins aggressively accumulating silver, restricting exports, and tightening refinery controls, markets notice immediately. Such actions imply a strategic shift toward securing long-term technological and national security advantages through silver. Silver is no longer just industrial. It is transforming into a crucial national security metal. High-frequency electronics, missile guidance, advanced solar infrastructure, and artificial intelligence hardware all require silver. China understands these dependencies and anticipates global shortages worsening as technological demands grow relentlessly. Global silver supply has struggled, with annual deficits emerging as industrial consumption consistently outruns mining production. China recognized this imbalance early, moving decisively to accumulate silver ahead of worldwide shortages. Analysts call China's recent maneuvers a coordinated three-part silver shock strategy reshaping global market expectations significantly. Step 1 involves massive import surges, drawing unprecedented volumes of silver into Chinese state and industrial hands. Customs data reveals historic increases, with factories absorbing volumes far beyond standard industrial requirements recently. Step 2 centers on domestic hoarding and tighter regulatory oversight, limiting refined silver leaving Chinese borders. Refiners must now report inventories, strengthen internal controls, and prioritize national supply over foreign exportation. Step 3 prepares for global shortages, positioning China to dominate future technologies requiring consistent silver availability. Declining or grades and stagnant mining investment ensures silver supply cannot scale quickly to meet demand. Most silver comes as a byproduct of other metals, limiting mining flexibility and slowing production increases considerably. As supply tightens, China's aggressive accumulation pushes global markets closer toward a structural scarcity crisis. Western mints report sourcing challenges, indicating tangible strain within physical silver channels historically reliable. Industrial buyers face rising premiums, confirming tightening availability across essential technology production lines. Investors increasingly recognize the early stages of a significant worldwide silver squeeze forming rapidly. If China retains most silver domestically, global markets must compete fiercely for limited remaining supply. This dynamic creates cascading effects impacting industry, investment markets, and future geopolitical resource strategies. Industrial producers may confront severe shortages, threatening manufacturing timelines and pushing prices much higher. Governments could reclassify silver as a strategic metal requiring protection similar to rare earth elements. Investors often pour into silver when physical markets tighten, accelerating price movements unpredictably fast. Fear, scarcity, and speculation can transform slow climbs into explosive price surges, historically observed repeatedly. Mining companies cannot solve shortages quickly due to geological constraints and long development timelines. Environmental restrictions further delay expansion, preventing rapid responses to sudden global demand spikes. New primary silver mines take many years to build, far slower than accelerating industrial consumption rates. Meanwhile, solar and electric vehicle industries consume enormous silver quantities exceeding yearly production significantly. This widening supply-demand imbalance strengthens the impact of China's accumulation on global silver stability. Analysts warn silver's undervaluation hides escalating risk as structural shortages worsen with technological expansion. Historical parallels show metals surge violently when dominant players corner supply or restrict market access. Japan's palladium squeeze, Russia's manipulation, and the Hunt brothers' silver episode illustrate similar dynamics. In each instance, markets underestimated scarcity until prices erupted dramatically beyond fundamental expectations. Today's silver setup mirrors those past events, with China acting earlier and more strategically. Physical inventories thin across Western exchanges, reinforcing fears of imminent shortages affecting supply security. Investors purchasing physical silver now contend with longer delays and shrinking available bars domestically. Industrial users warn governments of possible disruptions if silver allocation becomes nationally competitive later. China's actions reflect preparation, while Western economies appear reactive and unprepared for tightening resources. Bonded warehouses across Asia report increased withdrawals, consistent with strategic stockpiling behavior. Meanwhile, global mining forecasts predict limited growth incapable of satisfying projected industrial consumption. Chinese refiners operate near capacity, yet domestic stockpiles continue absorbing newly refined silver consistently. Silver may soon become one of the world's most strategically contested industrial metals within global markets. Market analysts now model scenarios showing silver achieving $63 during accelerated supply squeezes. Such projections consider industrial, investment, and geopolitical demand converging simultaneously in unprecedented ways. China's accumulation accelerates these pressures, creating a self-reinforcing cycle, driving prices upward steadily. Investors increasingly view silver as both an industrial necessity and hedge against global economic instability. Silver's dual role as commodity and financial asset magnifies volatility and strengthens potential bullish momentum. With supply tightening and geopolitical tensions rising, silver appears poised for transformative market behavior. China's long-term strategy highlights its expectations of future global competition for essential technological resources. The West risks discovering shortages only after market conditions deteriorate severely and prices spike dramatically. Silver's critical role in energy systems makes shortages particularly dangerous for national infrastructure resilience. Every advanced nation depends on electronics, solar expansion, and grid modernization requiring substantial silver. With demand surging, shortages could disrupt renewable energy deployment and economic stability significantly. China moves preemptively to secure these advantages, fortifying its technological dominance through resource control. Silver markets increasingly acknowledge structural fragility, preparing for potential rapid price dislocations ahead. Supply constraints, geopolitical rivalry, and industrial overconsumption form the foundation of an imminent silver bull. Investors already position themselves, understanding shortages rarely resolve quickly and often worsen unexpectedly. This convergence mirrors early stages of historic commodity supercycles, where scarcity fuels unstoppable momentum. As conditions tighten, volatility rises, drawing speculators who accelerate price trajectories beyond rational projections. Markets underestimate how fast silver can move when scarcity meets geopolitical competition and industrial necessity. China's strategy amplifies every underlying weakness, ensuring future demand collides violently with limited supply. The $63 target reflects structural reality rather than speculative exaggeration or temporary enthusiasm. Silver remains essential for technologies defining global growth, making shortages extremely consequential economically. China's forward-thinking approach highlights weaknesses in Western supply chains lacking strategic preparation. Nations dependent on imported silver may struggle to maintain industrial output during severe market tightening. These vulnerabilities underscore why analysts believe silver is entering an unprecedented high-pressure demand environment. 3 essential takeaways reveal what investors and policymakers must understand about silver's rapidly changing situation. First, China is aggressively accumulating silver because it foresees severe long-term global supply shortages developing. Second, surging industrial demand far exceeds mining growth, creating persistent deficits, driving structural price increases. Third, silver's evolving strategic importance ensures volatility and dramatic price movements as competition intensifies. These insights demonstrate why silver's future trajectory differs significantly from previous commodity cycles entirely. Serious warning emerges. Global markets are sleepwalking into a silver crisis China already prepared for. Nations ignoring underlying shortages may face unmanageable industrial disruptions once scarcity becomes undeniable. Investors aware of these dynamics hold a crucial advantage understanding structural pressures shaping future markets. China's strategy reflects careful anticipation, while other nations may be forced into reactive defensive positions. Silver's importance to energy defense and technology ensures shortages will become geopolitically significant issues. As demand accelerates further, price volatility will increase, attracting waves of investors seeking protection. Understanding these trends helps individuals navigate uncertain economic conditions. With informed strategic decision-making, silver's coming transformation offers opportunities for those paying attention and risks for those ignoring warnings. History shows metal shortages often escalate suddenly once markets realize supply cannot meet essential demand. To stay informed about unfolding developments, subscribe for deeper analysis of global metals and economic trends. Join the channel as we continue exploring the forces shaping the future of markets, technology, and financial stability.